Wall Street makes billions betting that you will never understand how the stock market really works. Most Americans believe one of two things about the stock market. Either it's a casino where you gamble and lose everything, or it's only for rich people with fancy brokers and insider information. Both beliefs are wrong. Both beliefs are costing the average American hundreds of thousands of dollars over their lifetime. The S&P 500, the index tracking America's 500 biggest companies, has returned an average of 10.5% per year for the last 100 years. Through wars, through recessions, through crashes, through pandemics, $10,000 invested in 1980 would be worth over $1.4 million today. And yet 58% of Americans own no stocks at all. Here's what the market actually is. When you buy a stock, you buy a small piece of a real company. If that company grows and earns more money, your piece becomes worth more. The stock market is not gambling. Gambling is zero-sum. One person wins what another loses. The stock market is positive-sum. As the economy grows, every investor can win together. The risk comes from picking individual stocks, timing the market, and panic selling during downturns. Wall Street profits when you trade frequently. Every transaction generates fees. That's why financial media bombards you with daily news, hot tips, and scary headlines. They need you to react emotionally and trade constantly. But study after study shows that the more you trade, the less you make. The average active investor underperforms the index by 1.5% per year. Over 30 years, that gap destroys over $200,000 in wealth. Here is the strategy that beats 90% of professional fund managers. Buy a low-cost index fund, like VU, which tracks the S&P 500. Set it to automatically reinvest dividends. Add money every month, no matter what the market is doing. Never sell during a crash. This strategy is so simple that Wall Street hates it, because they can't charge you fees for it. Warren Buffett himself has said this is the strategy he recommends for most Americans. You do not need to be rich to start. Open a Roth IRA at Fidelity or Vanguard. It's free and takes 10 minutes. Start with $50. Buy one share of VTI or VOO. Set up an automatic monthly transfer. Even $100 a month at 10% returns for 35 years becomes over $370,000. The most important decision is to start before you feel ready. 3 mistakes that destroy American investors. First, they're trying to time the market. Missing just the 10 best trading days in a year cuts your returns in half. You cannot predict them. Stay invested always. Second, selling during crashes. Every major crash in history has fully recovered and gone higher. Third, chasing hot stocks. The average hot stock that makes news has already peaked. The stock market is not for the rich. It is how the middle class becomes rich. If they start early, stay consistent, and stop listening to Wall Street noise. Subscribe for a complete beginner investing series coming next month. And comment below, what has stopped you from investing so far?